Market Life, and welcome to the free video for August 18th, 2020. So we're going to take a look at a trade we've been talking about here. This is the breakout trade in Lumber Liquidators, this ticker LL. And it's not a hard setup to understand unless you're very concerned with drawing nice lines on charts, in which case you'll discover it doesn't really fit in those nice lines. However, what most of the trading books won't tell you, that's normal. Very, very few setups fulfill the textbook expectations. And I'll also tell you a dirty little secret. I did a decade or so ago, I did a very careful study of several thousand real trades that I had done, looking at the patterns that, quote, looked the best. So the prettiest patterns, the patterns that were most symmetrical, the patterns that looked the most like the ideal. And spoiler, there was no difference in P&L between that group and the group of uglier patterns. So there's very little to be gained in trying to find the best looking pattern on a chart. Rather, you need to understand what's going on. And what was going on pretty clearly here was pressure and consolidation above a previous high. And this very, very ugly candle here actually shows a lot of bullish support, a lot of buying pressure. And so our trade was to look to buy an upside breakout. Now, regardless of where you put your stop, you probably should have hit your 1 hour stop, 1 hour target today. You could have had a stop that's pretty tight, but if you start to look at a stop down here, you're too far away, because what you want is when you get a large move, and this is what we call a 2.5 sigma move. So it's about 2.5 times an average day's move. When you get a move like that, you want to take your partial profit at 1R, and that's where your profit is equal to your initial risk. That's one of the keys to smoothing out your equity curve. And when you have a smoother equity curve, guess what? You can trade bigger. Now, why are we reviewing an old trade? Not just because it worked, but because of where the market is. And this is very, very close to all-time highs in the S&P. This is not an area we want to be putting on a lot of new long exposure. Rather, we need to give the market some time to set up, see what happens around these levels. Probabilities actually favor the market going higher. We do have a very clear plan for what we'll do if that fails, but despite all of the overboughtness and everybody saying something has to give, the market can't keep grinding upward. Well, the market can keep grinding upward, and it's not that overbought, and even an overbought market can get more overbought. So if you're feeling bearish tendencies here, try to temper those, because it's the wrong side of the market. So that's what we have today. If this video is helpful, give us a like on the video, subscribe to the channel, follow me on Twitter at AdamHGrimes, and we will see you back tomorrow for another video. Thank you very much.